All right, let's talk about the absolute core of auditing. What's the one thing that stops an audit from just being, well, a guess? It's all about the evidence. And that's exactly what we're going to break down today. Audit evidence.
Hey everyone, and welcome back to the Audit Guidebook. So glad you're here. Whether you're cramming for an exam, you're the new person on the team, or you just want a quick, clear refresher, you've come to the right spot. This explainer is part of Module 11 in our Audit for Beginners series, and we're all about making this stuff easy to understand.
Okay, so here's what we've got on tap. First, we'll cover what audit evidence actually is. Then, we're going to jump into the different levels of reliability, high, moderate, and low. And finally, we'll pull it all together with the big takeaway. Let's do it.
All right, first things first, what is audit evidence? Honestly, the best way to think about it is like the foundation of a house. I mean, without a solid foundation, the whole thing, the audit opinion, any recommendations you make, it all just comes crashing down. It's the proof. It's the why behind every conclusion you draw. So the official by-the-book definition says it's basically all the info an auditor gathers to back up their opinion. And you gotta remember, without rock-solid evidence, an audit opinion is, well, it's pretty much useless. The evidence is what gives it weight and authority. But here's the thing, not all evidence is created equal, not even close. An auditor is always asking two main questions. First, is the evidence sufficient? Is there enough of it? And second, is it appropriate? And that's all about quality. Is it relevant to what I'm looking at? And this is the big one. Is it reliable? That idea of reliability is really what we're going to be focusing on today. Okay, let's jump into our first category. This is the good stuff, the gold standard. This is the kind of evidence auditors dream about because it's the most objective and it really helps knock down that audit risk.
And kicking things off is the heavyweight champion of evidence, confirmation. The magic trick here is that the auditor gets information directly from a third party. You're completely going around the client, and that's huge.
And this is why it's so powerful. It's coming straight from an independent source. I mean, think about it. You send a letter to a bank to confirm a cash balance, or you ask a customer to confirm what they owe the company. That response comes directly back to you, the auditor. You just can't get much more reliable than that.
All right, next up in our gold standard lineup is physical evidence, and this one is exactly what it sounds like. It's about getting out there and seeing things with your own two eyes.
It's pretty tough to argue with something you can literally see and touch. When an auditor is in a warehouse physically counting boxes of inventory or laying eyes on a big piece of machinery to make sure it's actually there, that's not hearsay. That's direct knowledge, and that's why it's so incredibly reliable.
And rounding out our high reliability trio, we have computational evidence. You can also call it mathematical evidence.
This one's super straightforward, but don't underestimate how powerful it is. All the auditor does is redo the math themselves. They take a calculation the client did, like, say, depreciation expense or interest on a loan, and they just recalculate it from scratch. It's black and white. The numbers are either right or they're wrong, and the auditor can prove it. Simple as that.
Okay, let's shift gears and move down a level to the moderate reliability evidence. Now think of this stuff as the supporting cast. You're going to see a lot of this during an audit. It's absolutely essential, but it takes a bit more professional judgment to figure out how much you can trust it.
First up is something you'll be swimming in, documentary evidence. But here's the catch with documents. Their reliability totally depends on their origin story.
And this is the key point right here. A document that comes from outside the company, like an invoice from a vendor or a bank statement, that's way more reliable than a document created inside the company, like an internal memo or a sales report. Why? Because that external document has been seen by someone else, which gives it an extra layer of credibility. Next up, we've got analytical evidence. And this is where auditors really get to put on their detective hats. It's all about looking for patterns, relationships, and weird trends in the financial data. This is a great, simple example. Let's say an auditor sees that sales jumped by 20% this year. The immediate question is, does that make sense? You'd expect the cost of sales to go up too, right? Maybe their production numbers also increased. See, analytics don't give you the final answer, but they are fantastic at pointing you in the right direction and saying, hey, you should probably dig into this a little more. Okay, our third type of moderate evidence is observational. And yeah, it's pretty much what you'd think. It's watching a process or a procedure as it's happening.
So an auditor might go and watch the team do the year-end inventory count to see if they're following all the rules. But here's the big limitation. It's only reliable for that one specific moment. You know they did it right while you were standing there. But what about yesterday? or next week? That's the question.
And last but not least in this middle tier, we have something that's becoming more and more common every single day: electronic evidence. I mean, think about it. System-generated reports, digital invoices, all that stuff, it's the backbone of pretty much every modern company. But its reliability is only as good as the IT system it comes from. If the company has rock-solid IT controls, then yeah, that evidence is probably pretty good. But if their systems are a disaster, then that evidence becomes really, really questionable. All right, time for our last category, and this is the stuff you really have to handle with care. I'm talking about low reliability evidence. Now, it can be useful for sure, but, and this is a big but, it always has to be supported by something stronger.
So here, we're looking at two types of evidence that both come directly from the client's own people. First, you have oral evidence. That's just the answers you get when you're interviewing people. Then there's representation evidence, which is more formal. It's a written statement from management, like the famous rep letter.
And this right here just says it all, doesn't it? This kind of evidence has a built-in bias. Of course, it's important to hear what management has to say, but you can't just take their word for it and call it a day. You use this stuff to support other, stronger evidence. But it can never, and I mean never, be the only thing you rely on to make a conclusion. Whew, okay, we have covered a ton of ground. So, what's the big picture here? Let's pull all these threads together and see what the main takeaway is for any auditor.
This table is a perfect summary of the whole hierarchy. Right at the top, you've got your gold standard, highly reliable evidence. In the middle, you've got that supporting cast that takes a bit more judgment. And down at the bottom, you have the low reliability stuff that needs backup singers. A really strong audit uses a smart mix of all of these, weaving them together to create a safety net of proof for that final opinion.
So that leaves us with a really interesting question to think about for the future. Right now, we kind of put electronic evidence in that "it depends" category. But what happens down the road? With technology like blockchain creating immutable records or AI that can monitor controls 24/7, is it possible that electronic evidence could one day jump all the way to the top and become the new gold standard? Definitely something to chew on.
Hey, I really hope this breakdown of audit evidence was useful for you. If you found it helpful, do me a favor and hit that like button. It really helps out. And of course, subscribe to the Audit Guidebook so you don't miss out on more explainers just like this. Be sure to check out the other videos in our Audit for Beginners series. Thanks so much for watching.